Well, hello everybody, and thank you very much for joining the City UK's member update. And it's such a fascinating topic today that I'm really excited by having you all join us. So, by way of introduction, I'm Nicola Watkinson. I'm the Managing Director of International at the City UK. And today we are going to be looking at geoeconomics, geopolitics, and the impact that that is having on our industry and what that might mean for your business. There is absolutely no shortage of material, as I'm sure you're all aware, that we can be talking about today. And so I'm absolutely delighted to have two leading experts joining us for this conversation. So first of all, we have with us Dr. Helen Belaposky, who's the Global Head of Geopolitical Research at Deutsche Bank. And there she leads the analysis on political and geopolitical developments and their implications for markets, policy, and for your business strategy. And I'm also joined today by Christopher Koppach, who's the head of geopolitical and economic risk analysis in the credit specialties area of Marsh. And there he and his team provide political and economic risk assessments, insights, and analytical support to support clients around the world. So I think you will agree with me, we have a fantastic group of people to help us to navigate through what is certainly a very complex operating environment. Now, because there's going to be so much to talk about, we're going to do this as a sort of informal panel discussion rather than just as a set of speeches. And we're going to try and make our way through a number of different themes. So we're going to start off by looking at how are companies responding to this geopolitical volatility that we're seeing, and some examples of what companies are doing really well in this space. We're then going to move to look at how geopolitics is interacting with all the technological innovation and the pace of change that we're seeing in that area and how it's compounding some of the challenges that we need to address. We're then going to have a bit of a forward look because I think many of us are thinking about the US midterms and what impact that might have on the global operating environment, depending on which way things go. And then we're going to draw all of this back to understand what it might mean for the UK and for businesses that are operating here. So I think you will have some time then at the end to be able to ask your own questions. And we really hope that you'll join the conversation and make this really interactive. But to get us started, Chris, could I perhaps start with you? Marsh has been working with the World Economic Forum, and you have recently done your 2026 Global Risks Report. Could you sort of tell us what types of geopolitical risks business leaders are really identifying and really preparing for at the moment?
Yeah, certainly. Hi, everyone. Thank you for joining, and Nicola, thanks for the invitation to participate. Yeah, for those of you who don't know the World Economic Forum Global Risk Report, it's something released every year that Marsh has supported for a long time, and it's basically the combination of two different surveys. One survey conducted sort of in September of 11,000 business executives looking at what their top risk concerns are, and then another one conducted in November that looks at, again, with business executives, this time about 1,300 and also some government officials and other kind of experts in certain topic areas. And then the results of those surveys are analyzed and a few different themes drawn out. And they ask questions about what are top concerns in the sort of immediate here and now, what are top concerns in 2-year time frame, what are top concerns in 10-year time frame. And I don't think anyone on this call will be particularly surprised by, especially like the immediate and short-term findings. Top risks include geoeconomic confrontation, and state-based armed conflict, and economic downturn were sort of three really prevalent ones in the findings, including here in the UK specifically. And I think it's interesting to bear in mind when those surveys were done. As I said, first in September, the second one in November. So those results, those findings were based on people's views prior to everything that has happened, since November, which is obviously a pretty long list of things. And I'm sure many of those sort of perceptions of those different risks would have been reinforced by everything that has happened in the intervening months. And I think, those things, and I know we'll get into those topics in a bit more detail later on, so I won't linger on them. But one other finding stood out because the surveys do also ask about the sort of significantly longer term. And one question in particular is, what do you think the global political system, world order, whatever you want to call it, is going to look like in 10 years' time? And out of all of the respondents, more than 90% of them said that they think the global political system is going to be something other than a US led system in 10 years' time. About two-thirds said sort of a multipolar system where there's a lot of different powers, trying to set and enforce rules, norms, etc. And then kind of 20% said a bipolar one, which presumably most people are thinking US, China. And then the sort of balance, which is, I guess, 12% or so saying a new unipolar system, which again, presumably most people have on their minds China as the alternative to a US-led system. So I found that finding really notable because that sort of like global transition isn't something that has happened in decades, obviously, and it's something that businesses don't have a lot of experience dealing with, processing, kind of managing their way through. And so, if you buy and agree with the results of that survey to that particular question, that this is indeed a process that is going to happen over the coming years, that's something that as a business you ideally will be thinking about. And then the final thing I'll say is in the sort of like what are the top risks in the 10-year time frame, dominated by climate risks. And that's the case every single year. Is in the short term and the immediate, it's almost never climate risks. It's always sort of, it's cyber or it's state-based issues or it's societal or economic concerns. But in 10 years, it's always climate risks. And I think that is representative of probably what we see these days, that there are so many other things that feel like they take precedent, that climate gets pushed a bit down the agenda, even if everyone kind of recognizes that this remains a significant challenge that needs to be dealt with. So I'll stop there, but I think you know, the recognizing the climate piece and sort of keeping it in our minds and continuing to work to address it as something that hopefully we all can continue to manage to do in spite of everything else that we're dealing with at this time.
Yeah, well, yeah, thanks, Chris. And it's interesting when you think back to that survey that actually the concerns that people have largely been realised. The fear of conflict, the fear of economic downturn as a result of it is exactly what we're seeing in the immediate operating environment. And interesting, as you say, this issue about recognising the importance of climate change and the long-term impact it's going to have, but still struggling to prioritise it over and above all the other immediate issues that are in front of us. So I think that will be an interesting one and may play also into the technology discussion when we come to that as well. But Helen, if I can then turn to you and sort of pick up on some of this. I mean, when you and I've had a previous chat, you were sort of talking about, are we at this sort of structural inflection point? Rules-based system is fragmenting. Geopolitics is actually genuinely impacting on businesses in pretty much every sector, and this sort of ability to have more resilience is now a real leadership discipline that every company needs to be thinking about. Sort of thinking about all the issues, the risks that Chris was talking about. What does sort of best practice look like? What are some of the industry leaders that you're working with actually doing to try and adapt to these sorts of risks? And what do you think is going to be most useful for people joining us today to start thinking about?
Absolutely, and thank you, Nicola, and to the City UK for allowing me to join this panel. I think we're asking exactly the right questions because to me there is a fundamental shift afoot. Now, to Chris's point, I don't know what the end point is. Bipolar, unipolar, multipolar, bimultipolar. I don't think we're there yet, but the volatility is certainly at our doorstep. And this is an inflection point which is going to be sustained for some time to come. I think we cannot anticipate any sort of snapback, whether it's at the end of the Trump administration or in the years to come. And as corporates, and I spend my days, my nights, and now with the Trump decisions often happening on the weekends, my weekends, advising investors and corporates across the globe on exactly this. How do you manage this? Now, there's a lot of talk about navigating geopolitical risks. And to me, because I'm particularly pedantic, I think I looked up what the definition of navigating is, and it's finding your destination while avoiding all obstacles. Now, best of luck to all of the folks on this call in avoiding all of these obstacles. But I would suggest that it's not about navigating, it's about adapting your institutions, your organizations to this new normal, which is volatility. The best practices that I'm seeing are not those that are looking to wait and see what happens or that hope for the best. And picking up on a point that Chris raised as well, corporate leaders haven't really lived through this period of volatility. They don't have the muscle memory to deal with it. And so many corporates still adopt those 20th, 21st century approaches where you wheel in a former head of MI6 or a former four-star general to talk to your board once a year, have a drink, and then go about your business. That simply isn't sufficient. This is not about waiting for something to hit the headlines, but identifying and systematically, methodologically identifying the risks and the opportunities to your organization and to your bottom line. By the time something's hit the headlines, it's really far too late to be able to mitigate the risks or to seize the opportunities. So systematizing your approach to geopolitical risk is not waiting for it to be in the headlines. The first question I ask geopolitical risk analysts or would-be geopolitical risk analysts is, what is geopolitical risk? And often they come out with an answer which is geopolitical stuff. And that's, to me, is not salient. There's so many things going on: elections, wars, tariffs. The landscape is full. But what makes it a risk to an organization is what affects your bottom line. And so identifying the signals systematically, having transmission mechanisms to get the information to senior leaders at the right time, and avoiding groupthink. Groupthink is the enemy of effective management of geopolitical risks. So diversifying the people, diversifying the sources, and thinking about these things in a long-term emerging risk way. Because to the point that Chris was mentioning about some of the issues that have been identified by corporate actors in the WEF report are largely the known knowns. What we're looking to identify as well is the known unknowns, so we're not constantly surprised by what's in the headlines next. And so that's the magic sauce to try to deal with geopolitical risk in the current environment.
Thanks, Helen. And if I could just sort of draw that out a bit further, you talked about, taking information from a variety of different sources so that you kind of develop good sort of periphery vision, if I can put it that way. Then I guess looking at different scenarios and trying to analyze what the impact of those scenarios might be on your business, and then finding ways to communicate that up the line effectively. Have you got examples of companies who are doing that well, and could you sort of bring that to life a bit, what that might actually feel like if in companies that are really have got that sort of discipline in place?
So probably not, I can't use specific examples, but I would suggest to you having a robust capability in-house or having relationships with political risk partners from a variety of different regions. What I found is often in the US context, the sources of information, the sources of advice are coming from US firms, US sources, and the same is true in the European context. Diversifying the information feeding that into a robust emerging risk process where you do develop not just scenarios, but pathways, signals that you should be watching that you're moving towards one scenario or another. Red cell exercises where you challenge your own thinking. Tabletop exercises with senior leadership so they're involved in the decision making. One of the things I found particularly common amongst some corporate actors across the world is that senior leadership struggles with making decisions about things that haven't come to fruition yet. So it's easier to address the situation in Iran or Venezuela or what we had earlier with Greenland because it's in the papers, it's at the forefront of minds. But those longer burning trends, whether it's climate or demographics or transformational tech change, are harder to grapple with. And to get senior leaders actually involved, get them to work on it, do the thinking, plan, and develop the scenarios as well.
Thank you. That sounds really excellent, and I agree that when you want to get beyond the sort of reactive into the proactive. What are the things that could impact your business? What would be the signals you would see, and then how would you when they're triggered? What would you start to do before the problem arises? Chris, what about from your side? Have you seen some really good examples of how companies are really responding in practical ways and doing it well? And, what differentiates a company that can perhaps, anticipate or be ready to respond to a disruption like the war in Iran, in compared to those who, as Helen said, wait to find it in the news and then try and do something about it?
Yeah, well, I mean, good question. First of all, at some point that Helen made, I just want to reinforce the sort of trying to avoid groupthink issue and the recommendation, Helen, to get insights from kind of other parts of the world, not be an American business taking insights from other American businesses, because having lived outside the United States for quite a while, it is remarkable the sort of there are definitely kind of like distinct views in different geographies, in the United States, in Europe, in Asia on global issues, and they're pretty different, honestly, in a number of cases. I mean, for example, not to get into the details too much, but on Taiwan, generally in Asia, I would say there is a lack of a focus on the question of Taiwan being sort of a really pressing security issue to the extent that it is in the United States. And so I think just having those conversations with people in other parts of the world with different perspectives is a really valuable piece. I mean, and to your question, I think obviously Marsh being the world's biggest insurance broker, coming at this from an insurance perspective, I think insurance can be a really valuable tool in a kind of extended period of volatility like the one Helen was describing, and that I agree seems set to experience. And I mean, there's a lot of different products out there, but probably the most obvious one is political risk insurance, which unlike your typical insurance policies, which might you will for the most part last a year. Political risk insurance can be 3 years or 5 years or 10 or even 15 and not cancelable. So if you're looking at an investment somewhere in the world or a loan somewhere in the world, and the math otherwise makes sense, but you just look at that and say, gosh, it's going to take me 15 years to make my money back. I'm a bit worried about how much, this part of the world looks today, whether it's going to look pretty different in 15 years' time. And so you can protect investments with that, with policies like that and a bunch of other tools. So I would say, the insurance market is probably overlooked quite a bit as a way that you can get some level of hedging or managing risks for investments you would otherwise want to pursue. But I think that is not reflective actually of the value that potentially exists through some of these capabilities. And then I think on the second question, like what differentiates organizations, I think the communication, internal communication piece is a big one. Geopolitics, obviously something that can arise in one part of the business, have impacts in a totally other separate part of the business. And so how do you communicate within an organization, both kind of across different geographies and teams, but also sort of up and down the organization to decision makers on these difficult topics. And I think, again, as Helen said, a lot of organizations lack the muscle for this because they haven't needed it. for a long time. And so that takes some developing, and probably in a lot of cases, organizations already have expertise somewhere within their business, even if it's not kind of purely or strictly geopolitical analytical expertise. It's still expertise that is valuable, and just identifying those and connecting them and getting them to work together is better. And I would say, if as an organization, those of you on the webinar, the reaction to what happened most recently in Iran and the Middle East was sort of uncertainty, and to look around and say, who is managing within our organization the response to this? How do we know what part of the business might be most effective? How are we communicating with each other? That's the place to start, is just working on setting up those communication channels, because obviously that wasn't the first pretty significant geopolitical event of the last few years, and it probably won't be the last. So trying to improve preparedness for these things, I would say, is valuable. And then the final thing, a sister company of Marsh, Oliver Wyman, they did every year they do a CEO agenda survey, where they talk to CEOs in the US and in Europe, and ask them a series of questions. And I think, unsurprisingly, given how much volatility there is and how much stuff just keeps happening these days, the findings of this survey, part of the findings, were that CEOs are focusing an increased amount of time on the next 12 months and in the short term, and a decreased amount of time thinking about the longer term, sort of 5+ years, and preparing their business for that. And that's, for all of the reasons we can all understand, the sort of front and center, like right in front of your face, next few weeks, immediate commercial obligations, the next quarter, whatever, those pressures are always going to be there. But if this is a pretty rare process of geopolitical change, where awfully big pieces of the puzzle might rearrange in pretty significant ways, it's those businesses that do find the time and capacity to look up a bit, and lift their eyes and spend some time thinking about, if we do buy the idea that the world is going through a period of fundamental change, let's try and form a view on where we think it might be heading. Think about what the risks are for us. Think about what the opportunities can be, and try and navigate appropriately in that context, rather than, again, sort of, there's a lot of stuff happening right now, and sort of dealing with one bump after another as it comes.
Thank you, and I think that's a great takeaway for everyone who's here. That most people here will be on an exco or on the board, and I think making sure that you do set aside time, not just to look at, if you like, the most immediate sort of scenarios, but really look at things that are going to be possible in the next 2 to 3 years, and get some mechanisms in place for how you're going to respond when certain things might happen. It sounds like that's a sort of an element of leadership that has become much more important now, and something we need to all take on board in terms of our own responsibility to our organizations. And I think that there's a lot there for us to build on. But I also now want to, I guess, bring in yet another kind of element that I think layers on top of this, which is also, very topical, and just adds further to the challenge that we have at senior levels. And that is the intersection between geopolitics and technology. So, we're seeing, technology evolve, particularly in our industry, which tends to be a leader in professional and financial services. And it's, creating a lot of opportunities for growth, but it's also creating these new areas of risk, whether it's cyber risk, whether it's sort of dependencies, whether it's also liability or potential legal risks for things like increasingly complex AI models and so on. How would you think, Helen, about that kind of interface between geopolitics and how it's linked to the digitalization of financial infrastructure and these new technologies? And what are some of the things we really need to keep an eye on in this context?
Oh gosh, do we have an hour? I think there's so much to talk about here, and it really touches on the point you made earlier around the pace of some of the changes we're seeing. We're seeing this transformational technological change day by day, evolving, and that's against the backdrop of this quite transformational geopolitical change as well. So figuring out how to manage that is in part figuring out where the pain points might be. I describe what's happening as the politicization of everything, everywhere, all at once, whatever that movie was, and financial services not immune. In fact, I think finance is really becoming a geopolitical battleground, and payments are becoming political infrastructure in a way that they never have. Cross-border payment rails, CBDCs, sanction systems, messaging networks are now they're almost tools of statecraft, not just of finance. And we need to be able to game that out and figure out how that evolves as we see what I think is a critical element that overlays all of this. National security, economic security, and global economic leadership are now one and the same in many capitals. And that means an effort to really reduce vulnerability. Corporates are seeking to reduce vulnerability. Governments are seeking to reduce vulnerability. So technology leadership is firmly really in the mix now, like it hasn't been before. And whereas a few years ago, I could probably just have a conversation around technology and geopolitics with a focus on semiconductors and AI. Now it's much broader. Day by day, we see the politicization of a wide array of sectors that would have touch points with the financial sector. So it's beyond AI and semiconductors, cloud infrastructure, cybersecurity, data control are reshaping how we view competitiveness at the moment, and resilience and global influence. And what we need to think about is what comes next. What else will be in the crosshairs of officials and politicians as they look at managing their vulnerabilities? And you're increasingly hearing, and I think we even heard mention of it in this conversation, around geoeconomics. So the nexus between geopolitics and everything economic. And there's more to come. The use of economic levers, sanctions, restrictions on access to US dollar clearing, semiconductors, banking networks are pushing countries to build almost parallel systems. And that may well accelerate some of the financial fragmentation. Now, I don't believe that we're seeing deglobalization writ large, and I know there's been a lot of it's quite sexy in the media, the death of globalization. What we're seeing is changing patterns of globalization, whether that's changing based on trust in traditional allies, in opportunities, in trying to insulate yourself from geopolitical shocks. It's going to have massive implications in some of those areas I mentioned. And also, I didn't mention digital sovereignty, replacing that kind of pure globalization. So reducing vulnerabilities, governments want to control cloud infrastructure, data, chips, AI models, and payment systems. And that's going to make for a much more complicated landscape for corporates.
Yeah, thank you.
Sorry,
And look, no, I just wanted to sort of draw that out a little bit, because I think, as you said, our industry tends to be enormously global. That's kind of the nature of how financial and professional services, particularly in the UK, has been so successful. And we're seeing all these things. Obviously, data localization has been a real push, but increasingly this sort of notion of sort of strategic autonomy when it comes to economic security around particular things, whether it's technology or sort of critical infrastructure and underlying sort of plumbing and architecture, if you like, of financial services. For organizations, in our industry, you talked about obviously localization, maybe replication of systems in different markets. That's obviously a cost impost. Are there other things that you think, are you going to see companies restructuring in order to cope with these new demands that sovereign nations and governments are putting around all of this?
And I think we've seen that process for a number of years, whether it's de-risking, the China plus one strategy, the diversification post-COVID, the building resilience in light of this new, more volatile environment around data. Absolutely, we've seen those processes afoot. And so restructuring organizations to be able to respond to some of these issues. And at the geostrategic level, trying to read the tea leaves. Perhaps the City UK has a crystal ball. I don't yet, supply chain issues, but trying to understand what that means by sector, by jurisdiction, and where the direction of travel is. And I think what the past 4.5 months have shown us that the direction of travel is shifting very quickly. So some of those trend lines in terms of reducing vulnerabilities have been afoot by it for some time, but the acceleration of some of those and the new connective tissue we're seeing built in the international system. And I know I've spoken a bit about fragmentation, but new developments. So the FTAs, the free trade agreements that have been secured between Europe and Mercosur. So really evolving the relationship between Europe and Latin America. Europe and India, the UK and India, the UK GCC. We see Canada's outreach to China, UK outreach. So I've heard anecdotally that the number of delegations going to Beijing is so significant that they can't really even accommodate them anymore. So there's things fundamentally shifting, both from a fragmentation and a reconnectivity, a reglobalization perspective that will impact corporates. But again, to Chris's point, it's looking ahead, looking a few years into what that landscape might look like. Now, the only thing guaranteed about scenarios and scenario development is you're going to be wrong. But it gives you some sort of playbook. It gives you an opportunity to identify, to gauge where you are, and to prepare and mitigate any sort of potential risks. But the playbooks that have been used by corporates for old crises need to be revisited because COVID is not the same as Russia, Ukraine is not the same as Venezuela, is not the same as Greenland, which is probably not done to, which is not the same as where the US elections will go.
There's a lot there, and I know that there's a lot we could pick up on. Chris, I don't know if there's anything you want to add. We've obviously got Trump in China at the moment with Xi. We've got Carney calling for mid-power alliances. We've got all sorts of different combinations of, we can see in the UK a desire for a Europe reset, a strong alliance with the US, and a rapprochement, re-engagement back with China. And I guess for all of us, there's a lot there to be thinking about as we look at that. And then if you overlay things like data sovereignty, maybe critical technology infrastructure becoming a lot more politicized. Is this something from a Marsh perspective that you've also been looking at as well?
Yeah, definitely. I mean, I think, like financial tools, financial plumbing, these sorts of things, like from the US perspective, that's obviously an incredibly powerful tool that, this government, but also previous governments have clearly been willing to use and pull. But I think for lots of other governments around the world, um, their sort of financing choices, their what currencies they're using, how they're engaging with other countries is also a pretty high profile signaling mechanism, I suppose, in a way to kind of demonstrate alignment or even kind of frustration, I suppose, with other countries. And so and I think it also is a good way or I suppose a good demonstration of how kind of one issue of financing, for example, can be influenced by or influence quite a broad range of other things. And I'll give the example recently of the UAE kind of calling back their loan to Pakistan for on very short notice for more than three billion dollars, seemingly on the basis basically of deepening how Pakistan has conducted itself vis-a-vis the Iran conflict in Iran in a way that the UAE did not agree with. And so what did they do? They turned to some of their other tools that they had to basically demonstrate that frustration, and forcing Pakistan to make the loan whole. And then as a response to that, the Saudi Arabia stepped in to support Pakistan and provide some additional funding. And Pakistan and Saudi Arabia, of course, having relatively recently signed a mutual defense agreement, and clearly it's kind of strengthening ties there. And so I think for everyone on the call, how countries are using these financing mechanisms, how they are behaving, what currencies they're transacting in, are good indicators of what sort of alignments they're pursuing, or what other things they're trying to signal. And those need to be monitored and need to be tracked to understand which way governments might be heading and how they view relations with other states.
Yeah, that's fascinating, isn't it? The sort of seeing how our industry is being, if you like, maybe not weaponized, but certainly bought into as one of the tools of statecraft, as we were saying, and at the same time we're also seeing China looking at the internationalization of the renminbi in a much more proactive way. Talks of de-dollarization. So fascinating how the technology and the geoeconomics is really coming together. There is a saying at the moment that regardless of what else is going on in the world, all roads eventually lead back to the US, and particularly given the way that this current administration is operating. So I guess, Helen, I have many questions. I'd love to get to Greenland if we get a chance, but maybe more immediately, or perhaps not. The midterms. I mean, they're just seen as being so critical in the context of how this current administration in the US is working. What do you think are the different scenarios we might face depending on what happens in the midterms? There are some people who are hoping that depending on what goes forward, that things may all calm down and we may see a bit of a lame duck president. But I'm guessing from some of the things that you've been talking about, you're not necessarily convinced by that.
So again, I don't have a crystal ball, and in the American context, it's always a bit tricky, even with polling, to determine what happens. And November is a long way off, although primary season is starting very shortly. That said, if we're to believe the polling, we may well see the House, that the Republicans lose the House. The Senate, based on the vagaries of the seats at play, is still in play. But what's really important are the dynamics. So I can't say whether Trump loses the House and the Senate, which will have material implications on potential investigations or impeachment proceedings, or on his appointments, or on his broader policy agenda. I think it's too early to tell. But what I would suggest to you conclusively is that we're not moving away from the polarization and the fragmentation of the American system. And that's something, as we think about longer term trends, to try to understand and grapple with. Now, Trump 1.0 could have been seen as a blip. Trump 2.0 suggests that there's something structural happening in the American system that we should watch very closely, both in terms of the midterms and as we move through his administration. Now, there's some perhaps wishful thinking in some segments, which would hope that the Supreme Court decision on IEEPA tariffs was peak Trump, or that the midterms, however they play out, we'll see the end of maximum Trump. And I would suggest to you that we need to be really cautious about those assessments, in part because I'm suggesting to you that this is a very different Trump administration. Trump 2.0 is legacy Trump. And the years between his first term and his second term were spent preparing for a scenario where he didn't have the House or the Senate. And if the past year has been any indication of the agility, the creativity of the Trump administration in pushing forward policies, he is at war with Iran without having gone through Congress. He kidnapped the leader of a sovereign state and exfiltrated him from Venezuela without congressional approval. We've seen very agile ways of defunding institutions, very agile use of antiquated policies. This is because the intention is to be able to carry out this legacy Trump term in the absence of significant support. So, of course, we'll watch the midterms to show us the direction of travel, the sentiment, the indication of the sentiment of the American populace. And of course, for any sort of indications, the Democratic Party is coming to grips with a cohesive challenge to the Republicans in this Trump administration. But touching on your point, I think there's much more to come, notwithstanding how the midterms might play out.
And maybe a short comment. Obviously, we do have Trump in China at the moment. There's been some speculation about Taiwan and there. Do you think that could be a potential flashpoint?
So I'm fairly confident that mainland China would have an appetite to see a shifting position in the US from their strategic ambiguity to something much more definitive. I'm not sure they're going to get that. My expectation from this summit will be tactical progress in terms of bringing down the temperature, reaching some sort of guardrails or rapprochement, building on the Busan Agreement, soybean purchases, Boeing purchases, investment commitments, potentially some support to the US in terms of the Chinese relationship with Iran. In order to drive some sort of nearer term resolution to the opening of the Strait of Hormuz. But structurally, there are some challenges in that bilateral relationship which are not really going anywhere. There's a trust deficit, there's competition for advanced technology, for influence, for critical minerals, for global leadership. And that will be a constraint on any sort of really material strategic progress, although we're likely to see 4 meetings this year between the leaders, which is great in terms of stabilizing the relationship. I imagine if you're going to get a big, beautiful deal, that might take place in Mar-a-Lago as opposed to Beijing. And that might give us some sort of certainty about or confidence in the relationship into 2027. But in the longer term, we have to try to examine where the pain points might be. The Taiwan Strait, my sense is that the mainland has little appetite in any sort of military reunification in the near term, although that remains a strategic priority. There are a number of inhibitors, the economic impacts, $1 trillion impact on the global economy of any sort of constraints to movement of vessels through the Taiwan Strait, the amphibious assault necessary to take Taiwan. The Chinese military is still going through modernization up until 2027. And of course, the Trump administration and Trump is a potentially volatile character. So I'm not sure this is the moment that China does anything opportunistically to change the status quo in the Taiwan Strait in the near term. Maybe that's a good news story.
Okay. Yeah, well, we'll take it. We'll take it because we could use a little bit of it. Chris, can we just draw this back now to the UK, please, and say, what do you think are the implications, for the UK? We're obviously we're not one of the superpowers. We're more one of the middle powers, if you like, and we're also very much an international financial centre that relies on being able to service the rest of the world in order to maintain our success. What do you think the impact of all this is having on the UK's relationships globally, and maybe a comment on Europe, given that that's obviously very topical at the moment as well?
Yeah, so I mean, I think, the discussion earlier about how kind of governments are becoming more involved in payment flows and financial behavior, financial decision making, allocations whatsoever is applicable here as well. And I think, when it comes to the UK specifically, that middle power sort of framing is sort of the operative thing, because in a non-hegemonic system, which if that is indeed kind of what we're heading towards, middle powers tend to have to choose either to align with kind of one power center or another, So the obvious sort of power centers available as options to the UK are the EU or the United States, or to choose to kind of try and balance and bridge and remain non-aligned. Now, the kind of evidence of the past few years suggests that, like, broadly speaking, the UK's strategy is to try to balance, to go with kind of the latter strategy rather than put all its eggs into the EU or all its eggs into the US basket. Um, but that obviously, if that strategy remains, I mean, they both have upsides and downsides, but the upsides and downsides to the sort of balancing non-aligned strategy is if these two power centers move further apart from each other, you then sort of end up in the kind of roadrunner-esque type situation of having to stretch your legs further and further and further to, stay in the middle of that relationship. And so I think that is where the sort of key challenges can lie, and these key kind of um, uh, speed bumps, I suppose, is being forced to take decisions that are inevitably going to kind of frustrate one side or the other, and also being unable to kind of gain the full benefit of total alignment with one side or the other. And one of the obvious examples of this, I think, is what's happened around and is continuing to happen around the UK's participation or lack thereof in the SAFE instrument, the EU's kind of defense funding mechanism, 150 billion euros, so on and so forth, and all of the guardrails that the European Union countries, especially the French government, are pushing for around that. That's making it more difficult for UK defense businesses to participate. It's raising the cost of entry and qualification and all these other things. That is, at least in part, a function of not just the UK's non-membership in the European Union, but their sort of arm's length distance stance towards the European Union generally that they're continuing to maintain, and the European Union basically reciprocating that. So I think, for everyone on this call, I would say, pay attention first of all to what strategy it seems the US or the UK government is pursuing. Is it the sort of non-aligned balancing between the power centers, or is it starting to increasingly align towards one or the other, and think about how that might affect your business, or your sort of your lending, your borrowing, your whatever it may be in those other power centers, as a result of that. Because as kind of we all know, and as we've talked about throughout this call, that the decisions strategically that governments are taking are having and are going to continue to have pretty significant implications on risks and opportunities for businesses as well.
Thanks, Chris. And yeah, and I think that's, such an important point, that even if you're not directly present in all of these markets, they can still impact on your business back here in the UK. So understanding what's happening and what that might do to your cost of finance, your cost of insurance, how it's going to play out for your clients and what it might mean for them means that we all need to be really continuing to watch this and understand what the likely impact's going to be. I am now going to try and allow a little bit of time for questions. So if anyone would like to pose a question, please do let us know, and we'd be delighted to hear from you. I can't see anything just myself at the moment. So I do have one that was sent in actually, by someone ahead of time, because they wanted to make sure it didn't get lost, and it's about US swaps. So they're sort of the question is really, if you're looking at those kind of financial tools, and we've talked about how they're being increasingly used, and USD swap lines was an example of that, really getting sort of more entangled into those sort of foreign policy agenda that we're seeing play out. What other mechanisms, like sort of the swap lines, do you think we might need to start seeing, being more aware of? I mean, I don't know which one of you would like to sort of pick that one up first.
Chris.
Helen? Me, I mean, I can go first. I mean, I would just say that I think it's, the swap lines are in the news, obviously, because of, what's supposedly under consideration between the U.S. Treasury and the UAE, the government of the UAE. But I think it's more on my mind, it's more like when under what circumstances might financing or swap lines or whatever not be made available because of political sort of priorities or strategic priorities when they otherwise might be made available in a kind of less competitive system. I mean, obviously, Argentina got this pretty essential sort of line of financial support from the U.S. government right before their election at the end of last year. That was pretty essential in helping manage the value of the peso there through the election timeframe and all the uncertainty around that and the pressure markets were putting on the currency as a result. And that was born out of, I think, one, a personal relationship between the two presidents, but also a desire to sort of maintain and strengthen Argentina's geopolitical alignment with the United States. And I think you can look around the world and see other places where the United States would probably take the opposite view of, you as a government have not, been supporting us in our strategic initiatives. You are not working with us, and so, we appreciate you might be in financial difficulty or need some financial support from us, but you haven't been a team player. And so either, become a team player and demonstrate that, and we'll support you, or there's going to be kind of a really high cost to us supporting you. And I think obviously right now that's kind of the direct bilateral stuff, but where are the IMF and where are the World Bank based? They're based in Washington, of course. And so I think those are institutions that we should pay pretty close attention to as well, in terms of are they under pressure to lend or not lend in certain situations, and how might their behavior change as a result? And I don't know that is necessarily very much the case yet. But I think it is entirely possible that it could become the case again, that these pretty key multilateral institutions in global finance start to become a bit less multilateral, or at least under pressure to become a bit less multilateral.
Wow, that whole decline of the, if you like, of the sort of multilateral institutions more broadly would be a reflection of that, right? And certainly have some quite widespread impact, particularly on emerging economies, which really rely on some of that support. It picks up really nicely on a question that Matt Jones has put into the Q&A section down at the bottom. So if anyone else wants to sort of drop in and answer a question there, please do. And he's asking, what do you think are the implications for the UK's presidency of G7 and G20, which is, I guess, speaking to some of this work. What do you think it might be possible for the UK perhaps to do in those kind of fora at the moment? What kind of agenda might it want to try and aim for? Helen, do you want to maybe pick that up, and anything you want to pick up from the previous question as well, please go ahead.
Yeah, picking up on Chris's brilliant points around swaps. To me, sadly for my parents, I'm not an economist, so I'm not really positioned, but I have hubris, so I will speak to it. The weaponization of commerce, I think that's a key trend line. So whether that's sanctions or the expansion of tariffs or other economic levers, the US dollar is one that's a really interesting one, in that the number of questions I get at the moment about the primacy of the dollar have really accelerated. And whilst there aren't any real alternatives, and the vast majority of international trade is conducted in US dollar, there probably are opportunities for other currencies afoot. And gosh, the RMB internationalization couldn't have gotten a better push than we've seen over the course of the past few months based on US policy. But the use of various levers, investigations by Europe, anti-dumping investigations, the use of reciprocal tariffs, that is likely to increase, and that's going to create a much more complicated environment for corporates to operate in. So I was just adding that that's something, some excitement to prepare for as we see the rollout of some of those policies, not from just the traditional users of those policies, but further afield. On the G7, G20 presidency. To me, some of the critical priorities are those that have already been identified under the current presidency and the preceding presidency. The focus on multilateral, response to some of the economic security issues that are emerging, as well as the critical crises of the day. So the UK formulating an agenda which perhaps builds on, and I'm Canadian, Prime Minister Carney's speech at Davos about banding together middle powers, which seems to be every country but the US and China. So non-aligned, perhaps, if we term it in that Cold War term, powers coming together to build or to maintain the international landscape that they seek to maintain. So I think there are a number of different elements that's probably around defense and security, around economic resilience and economic competitiveness, and around multilateral management of some of the crises of today, but of the crises of tomorrow as well. So I think those are probably three elements that should be or may well be priorities for the UK presidency.
Yes. And do you
And
see, sorry, Chris, please jump in.
no, I was just going to quickly say on the on like the de-dollarization bit, I'm not a huge believer in that being something that's going to happen anytime soon. I mean, if you look at the pound, the British pound, which of course is kind of the last major global currency, most people kind of mark the end of British global dominance being 1914 or somewhere thereabouts. But the pound was still like 75% of global XF reserves in 1940, 25 years later. And I think part of that is because, for foreign exchange and trading, these currencies have such strong network effects that it's really hard to chuck them out. Um, and obviously, I mean, in my view, the network effects are much more powerful today than they would have been in the 1920s and 30s and 40s. So that effect is even more kind of resilient. And so I think, for a alternative, for the world to be somewhat de-dollarized, more de-dollarized than it is now, you need a viable alternative, which of course everyone looks at China's currency. But of course, they need to get rid of their kind of controls and restrictions that they place on that currency, which they do for domestic political reasons and domestic economic reasons. And so then to get to that point, you need the Chinese government to decide we are less focused on our domestic political priorities and more focused on trying to internationalize the use of this currency, which is a decision they may take, but it is one that they would need to do. And then the second, and maybe one they're not that likely to do, is they're still sort of struggling through a kind of trying to restart their economy cycle. And then the second piece is, it seems like you need a bit of a crisis so you need the viable alternative, but you also need a bit of a crisis within the currently dominant currency. Whether that was what Britain went through in the 1920s and 1930s and 1940s, or, potentially everyone talks about the US debt deficit and the impact on the dollar there. Maybe that's the origin of a crisis for the dollar eventually. But I think you do need to have both of those things of sort of viable alternative and a crisis in the existing one to kind of oblige people to go through the pain of adopting an alternative.
Fantastic, Chris, and a great example of what kind of signals would you be looking for in your scenario planning to make you think that that is something that you're going to have to start to really think about. So fantastic example. I'm afraid we're at the end of our time. We could have talked for hours, and there's so much more to cover, and we didn't even get to Greenland. But please, Helen, Chris, thank you so much for your insights. I think all of us can really take away so much from what we've heard from you today. And for those on the call who are interested in the international work, obviously here at the City UK, we have a big program of work that we do in many of the major markets that we touched on today. So we'd love to hear from you. A big thank you to everyone who joined today and to the fabulous events team who pulled it all together. And we look forward to hearing and seeing you all at a further member update. But for now, Chris, Helen, thank you so much. And thank you everyone for joining us.